All right, guys, good morning. Can everybody hear me okay? Just throw a yes in the chat, just so I know. Don't want to sit here for an hour just talking to myself. Okay, sweet. I got one yes. So, um, morning, everybody. I'm Mark Alexander with Benchmark Mortgage. A lot of you know me. We work together. Some of you may be new, and I want to spend really the next 30 minutes, maybe 45 minutes, truly going over condo financing mastery and touch on the landscape of the current condo environment in ways that, as an agent right now, you can really thrive and succeed during this shifting condo environment. So I'm going to share screen, but I want anybody who's brave enough to put their cameras on. We can use the hand up to if you have a question, or also if you could type your question in the chat as we're going through. I'll try to pause throughout this and try to stop and answer a few questions here and there. And then at the end, we'll have a time for Q&A and really be able to go through any pressing questions or concerns anybody has. So let me go ahead and just share screen here. All right, can everybody see this okay? All right, beautiful. So if any of you guys are on your phone right now, I'm gonna send the entire slide deck to everybody after this. So don't worry about looking down, taking screenshots. If you're driving, definitely don't do that. We don't need any more traffic jams on I-95 going south or north right now. But I really want this to be more of a live workshop, right? Keep this Thanksgiving style. So seriously, feel free to unmute, talk up, or send over a question in the chat box, and we'll address it as we go. But really, the biggest things I want to talk about today, number one is just understanding the current condo environment. I'm sure everybody here is seeing headlines on the news, hearing from clients about the shifting landscape, and there's a lot of concern right now in the South Florida condo market. And so I want to address some things that have changed over the last couple of years since the Surfside collapse that happened. And then I also want to talk about different types of condo financing that you can help for your buyers and sellers if you're having listings to vet out the offers to make sure that we're doing this the right way and saving time for you as the agent. And lastly, we're going to go over a secret weapon that you can actually use and implement in your business right now, again, to help save time, increase confidence with clients, and just make your lives a whole lot easier. So has anybody seen any headlines like this within the last 3 to 6 months? By the way, I usually do these in person, and everybody's gonna talk up and scream at the top of their lungs and stuff like that. But yeah, there we go. So this is my first Zoom master I'm done. So give me some slack, give me some break here, and we'll get through this. But this is what our clients are seeing right now on social media, online, buyers, sellers, and I'm sure you guys are hearing this. I'm hearing a lot of this too. And as we know, the mainstream media is great at skewing things. I'm not here to say that the condo market is all sunshine and rainbows right now either, though. What I do want to do is take a moment for us to really become the subject matter experts, understand the environment we're in, and help our clients navigate this environment, so that way we can help them make educated decisions as we go through this. How many of you guys have ever had a condo transaction, whether you are the buyer's agent or the listing agent, fall through the cracks because of a finance transaction? Yeah. I'm definitely sure it's a lot of us. Give me 1 second, guys. I'm actually going to make sure that everybody's getting in here. There we go. All right, we had like 10 people in the waiting room. Told you this is my first time. Got to roll through it. All right, cool. So again, this is what the media is seeing. This is what all of our clients are seeing. And so let's touch on some of the law changes that actually came into place. So in May 2022, Senate, the legislators passed Senate Bill 4D, addressing the systematic issues with how condos are maintained and financed. And a lot of amendments have been changed. And so I'm going to touch on these really quickly here. Today is not about us going deep into the condo rules. hopefully you guys already know some of that stuff, but this is some research you can do and even talk with your brokers about. What I really want to talk about is the financing strategies we can get through this today. But condos 3 stories or higher must undergo an inspection after 30 years and every 10 years after. This will determine whether the building is structurally sound and if it's going to need repairs. Also, buildings that are already 30 years or older must have inspections completed before the end of 2024. Condos 3 stories and higher must review reserve funds before the year is over and every 10 years after. This is going to determine how much the condo associations must save to properly maintain the building. Condos must base a budget adopted on or after January 1st of next year, so heading into next year, on findings and recommendations to review the reserves. And then condo associations 3 stories or higher will be barred from waiving or underfunding reserves. So to keep this really simple, there's a lot of changes that HOAs now are legally having to go through to start reserving funds to make sure that the repairs that are going to be needed are going to be there as years to come. Because if we look back the last 30 to 40 years with older condos, especially in Miami and South Florida, they have not been reserving funds. And we're getting to this point because of the Surfside collapse, and we're not going to get into that. But a lot of this has changed and created this, and we're seeing more special assessments coming into play with clients, whether it's lump sums or it's monthly installments that they're having to do. And it's creating a lot of uncertainty in the market, and people are actually like listing their condos. And I'm sure you're seeing that days on market is increasing, the number of listings in condos are increasing. And so this is really the landscape of the current condo environment. There's the SIRS report, the structural integrity reserve studies being needed, the 40-year research. That's causing a lot of these special assessments. The other thing that is causing a lot of rising costs is the master insurance policies. So a lot of clients, when they come in, they don't really understand how the HOA fees work, but a large portion of condos HOA fee is going to be the master insurance policy. And so the things we're seeing on the lending side that are causing problems with deals is there's less than normal coverage, so sometimes they're reducing windstorm. I'll give you an example. We just closed on a unit at the Waverly down in South Beach. It's not a conventional loan. It cannot get conventional financing, and the main reason was because just to keep it high level, the master insurance policy was $100 million of insurance, but the windstorm coverage was only $25 million. So if a windstorm event happened, the insurance was only going to pay out 25 million, not 100 million. And so as a bank, when we lend money, that's obviously an added risk. The good news is there's still lenders will be willing to finance in situations like that, but it takes more creativity. And, the big bank going in and doing a conventional loan, you might get 3 weeks into a transaction and the wheels fall off, right? So all these are, again, changing. We're seeing increased special assessments. We're seeing, condo owners facing higher HOA dues, causing them to, increase the listings, and then banks are tightening guidelines. So a lot of this is all, sounds kind of doom and gloom. But again, I want to talk about now the positive side of this and how we're going to get through it. Charles, you had a question about what was the workaround for the Waverly. So with the Waverly building specifically, for those of you who don't know, that's in South Beach. The workaround is there are lenders that are willing to lend money on condo buildings that don't meet Fannie Mae and Freddie Mac's guidelines. Okay, and this is called non-warrantable condo financing. So we're going to go into some more detail on this. So I'll wait till we get there. But there are lending solutions that if Fannie Mae and Freddie Mac, the large conventional mortgage lenders in America, aren't willing to lend based off their guidelines, it doesn't mean that the client can't get a good loan in that building. This client got a 30-year fixed mortgage, about a half a point higher than the going market rate. It's not a crazy situation, and it is doable to get financing in those buildings. So here's our opportunity right now. I think every agent right now and every lender truly needs to become the subject matter condo expert. And what I mean by that is, do you have a relevant opinion? Do you have facts? And do you know what's going on in the condo market when you're talking to clients? Because clients are uncertain about buying condos right now or selling their condos. And if you are uncertain about the advice you're delivering to them, you're likely going to lose more deals. And so the goal of today is to help you increase conversion and have strategies to really come across confident to your clients and make sure they're making a good decision. So one of that's just gaining market share. I think personally, this is just my opinion, I think the condo market is actually going to be more vertical than horizontal. And what I mean by that is there's going to be a brand new building or a building that may be 10 years old that everything is going really well, and then right next door there's a building that's 40 years old that was been kicking the can down the road, you could see certain buildings have increased listings, increased depreciation, where other buildings have increased appreciation, right? And so there's going to be a little bit different, and every condo is going to be different. And so understanding how all of that works is going to help you as an agent, especially when you're taking a listing or getting ready to show a buyer in those buildings. The other thing is just increasing confidence. We talked about that. And then lastly is reducing your sales cycle. So one of the biggest things that I try to coach my agent partners on, whether you're working with a buyer or seller, is there are ways to reduce and reduce your sales cycle and quicken that. Because what I see a lot of times is an agent will show a buyer a condo building. I could have told you it was on the denial list. They drove there, they showed them that. They took 2 to 3 hours out of their day just to show a condo, a client unit. And that building, I can tell you, was not getting conventional financing from day one. So it's like, why even show that unit if we know for a fact it's going to be tough, to get financing? The key is we want to go through and make sure the client, we know their financing situation before you start showing property. On the other side with listings, I've seen a lot of times where I'll have an agent call me, they have a listing in a building. The master insurance wasn't vetted, budget wasn't vetted. They accepted a conventional loan offer. 3 weeks in, 4 weeks in, bank denies the loan. I figure out why they denied it. And I'm like, well, this could have been avoided literally within the first 24 hours of the offer. And so I pause to say that, like, when you're going and working with condo clients, whether it be buyer or seller, it's, if you take maybe an extra day or two to do the appropriate things, and I'll show you what you can send directly to the HOA to get for us to review as the lender, you can save your client headache, you can save yourself headache, and you can make sure we're increasing the amount of conversion. Somebody is drawing on the screen right now, and it's not me who's doing that. Anyways, we'll go with it. All right, so different types of condo financing types. By the way, does anybody have any questions before I keep going? You can throw it in the chat or unmute yourself. Ready to roll. You might need some Advil after this. We're gonna go through a lot here, but it's all good stuff. So there's 3 different types of financing, and really 2. There's conventional financing and non-warrantable financing when it comes to condos. Now, we're not going to touch on FHA. It's very tough to get FHA financing on condos. It's not impossible, but clients getting FHA loans, few and far between to get financing. We can talk about that off the chat. VA is a different. I'm not going to touch a lot on VA for veteran financing, but there are a lot of ways to get veterans into condo financing. Our team at Benchmark actually approved Brickell Heights 2 years ago, and now the entire building is VA approved because we took 2 weeks to go through that process, and now veterans can buy with 0% down financing in Brickell Heights. And there's actually over 300 condos just in South Florida alone that are eligible for VA financing. So if you ever do have a client that is a veteran, it's possible, right? Don't like count it out. So when it comes to different types of reviews, we're gonna talk about conventional and non-warrantable. So conventional, there are what's called a full review and a limited review. All this means is that the bank is going to do a full review if we're putting less money down, or we're going to limit the amount of questions we ask on the condo questionnaire, which is called limited review, if the client's putting more money down. So for example, if a client a first-time home buyer wants to do 3% down in a condo, there's a lot we have to make sure of. For example, one of the biggest things is we want to get a copy of the approved budget. So right now we would want to look at the 2024 approved condo budget. And to keep it this easy, it's a 10% golden rule. So if the HOA, as the income that they make every year is $1 million a year, and they reserve 100 grand per year or more, we are good at that point to continue with full refinancing. If the HOA assessments are, $1 million a year, and they're only reserving $50,000 into reserves, that's only a 5% reserve allocation. That is not going to be able to get 3% down or 5% down financing in that building. The workaround to that to keep the loan conventional is you can put 25% down or 30% down if it's a second home or investment, or you can even take a small piggyback loan, which we do a lot of these, where a client can still do 10% down if the condo doesn't have the reserve allocation, and still be able to do 10% down in those buildings via a piggyback second loan. So that's the standard financing. That's what clients take out with conventional loans. And the main thing that up front to get is the budget and the master insurance policy. And we'll talk through a few other things as well. Non-warrantable condos, really start at 10% down. I'll be honest, the rates at 10% down are usually about 3% above market. But as you get to 25, 30% plus down, the mortgage rates on non-warrantable financing are very similar to conventional financing. They're really not that much higher. And it provides creative solutions for, litigation, insufficient insurance, condo hotels, new construction condos. A lot of the outside the box financing is still doable. And that's why it's so important that a client goes through a pre-approval process and has a true consultation prior to hitting the ground running, so we can determine, can the client do non-warrantable? If they can, your life as an agent is going to be a lot easier. If the client can't do non-warrantable financing, then we have to really take a step back and get really granular with this, because I would say last year, before a lot of these changes happened, 7 out of 10 clients that were buying condos were eligible to get a conventional loan, as far as like the building was passing conventional financing. This year, my team and I were seeing anywhere around like 3 out of 10 are only eligible to get condo financing. So when you think about that, it's like if you layer up 10 condos in South Florida right now, ideally probably 3 out of 10 are only eligible for conventional financing. So we're non-warrantable condo financing is on the uptick right now. It just is what it is. And the reality is that honestly, the next couple of years in the condo market is going to be a little choppy. And this is why you need a lending partner who understands this to help your clients navigate it. My hope, though, and what I see from all of this is with the proper reserves coming into play, we are going to get to a point where there's going to be a lot more streamlined process, and there's going to be a lot more conventional financing opportunities for clients once we get through the chaos we're dealing with right now. In the meantime, I truly believe that when there's fear and there's uncertainty, it's an opportunity to gain a lot of market share. And if you know what you're doing as an agent, you can truly win client relationships. You can go vertical in buildings and market that and get referrals from it. And you really start to be the expert in that matter. All right, so this is what I call the big troublemakers, and I'm going to try to go through this as easy as possible, but I want everybody to truly understand, especially the most common. Like, these are the biggest deal killers right now when it comes to getting mortgage financing right now on a condo. The first thing is the budget, right? We want to make sure that they're reserving 10%. We already talked about that, right? So if you're an agent right now and you have a buyer that's going to start shopping for homes, let's get the budget from the HOA. If they don't have the 10% reserves and your client needs to do 3% down, let's not waste our time on that one. Let's come back. And I'm going to show you guys, we'll get to the secret weapon in a second that's going to make your life a whole lot easier here. The second thing is special assessments. There's a massive rise of special assessments. And on our condo questionnaires for conventional financing, it asks if there are special assessments. The purchase contract also asks if there are special assessments too. And so it's very important that we understand what the special assessment's for. If there's repairs, what are each repair and how much, what's the status of that? Has it been completed? Has it not been started? If it's big things like, concrete restoration, seawall repair, balconies, elevator, things like that, that can cause issues when it comes to conventional financing. If it's a special assessment for like redesign of like the carpets or the tile floor in the lobby and stuff like that, it's, that's not as big of a deal. The key word is it structural and are there safety concerns? So that's a big one right now. Are there active special assessments? Let's get ahead of that and understand that. Litigation as well. So structural or non-structural. So a lot of litigation can be overcome. I've got a scenario right now where there are 2 litigations in a building. One is related to a 558 claim that has structural issues, and that's not a lot of lenders want to touch that. The second litigation in the building was somebody stole a Lamborghini in the parking garage, right? And so that one we can get over, right? It's not directed to the structural integrity of the building or anything major. So the nature of what the litigation is, we want to get a copy of that lawsuit and review this. Lastly, the master insurance. I would say the master insurance is probably the biggest thing that's killing deals right now. We're seeing what's happening because homeowners insurance are rising. It's not just condos, single family homes, townhomes, even commercial property. Everything is rising because obviously we're in the lovely South Florida, right? And insurance rates are rising. Well, that's translating into the condo market as well. And so what you're starting to see is that commercial insurance agencies are getting with HOAs and they're doing policies that are not covering the way they used to. And they're kind of doing some loopholes to keep the insurance in play, but it's not quite the quality of insurance, right? It's kind of like, you look at a McDonald's commercial and like the Big Mac looks great on the screen, but really when you actually get it, it's like, this is actually horrible, right? Really bad for you. So what's happening with master insurance is like you're having actual cash value clauses added, insufficient, they're reducing the windstorm coverage, which makes the premiums go down, which makes the HOA fees lower. So this is helping condos go to the owners and say, hey, we're not having to increase the insurance as much because we're doing some things on the back end. The bank, though, does not want to lend money on condo buildings if there's half-ass insurance, right? So we have to review that. And so if you look at those four things, right? Budget, special assessments, litigation, master insurance. I would say arguably over 95% of transactions are not getting any of that until probably 3 weeks into a real estate transaction. So if you think about that, I was like, well, how dumb is that, right? I mean, why would we wait that long and put our commission at risk when reality is we can get upfront about this and probably get majority of those four pieces within a couple days. HOAs have this, insurance agents have this. I'm going to give you guys a template email at the end of this that you can literally copy and paste, forward to an HOA when a client is ready to make an offer, and let's just get ahead of this. My condo team, they're in Dallas. Once you send that over to us, we can review that for you and basically go through and look at the insurance, look at any special assessments, look at the budget, and kind of give you guys some certainty. That way we're going in and trying to get through any of the big red flags. The less common things are, it's still problematic. Condo hotels, conventional is not going to be eligible for condo hotels, but there are now more warrantable options that will do that. Recreational leases, mandatory memberships like country clubs, golf memberships, new construction, commercial space if it's over 35% of the building, and then single entity ownership, depending on how big the project is. If it's 5 to 20 units, if it's more than 2 units, or projects with 21 or more units, 20% if one person owns it. So again, less common, but they still come up. Before I keep going, there's a lot on this screen, but it's a lot of really important stuff. Does anybody have any questions, or does anybody want to be brave to unmute themselves and ask a question on any of this before I keep going?
I will add one thing, Mark. One of the things that was really big that you just hit on was that email that you can send out to request from the HOA. I've been kind of shifting into a pretty listing heavy portfolio these days heading into season. And I've been sending that out in collaboration with Mark and the condo desk before I list any property. So if any of you are going, pre-market, private exclusive, anything like that, as you're meeting with a seller, definitely would push home on doing that. Obviously, sending it out day one when you're the buyers too is helpful, but also just realize that's something that really can help on both sides of the equation here big time.
Sweet. Thanks for throwing that in there, T. That's my brother. I paid him to say that. I'm just kidding. Well, but it's super important, right? When you're talking about like if you have a listing, right? Like why not get ahead of this stuff in the list phase? That way you're not taking the wrong offer, and you can set expectations with your seller too. You have real data to say, hey, they haven't been reserving. This is going to limit our buyer pool, right? I mean, let's get real with it. All right. Next thing. So this going into, kind of tying in a few things here at the end. I wanted to share with you guys like what I call your secret weapon. It's my secret weapon. And this isn't on Google. You can't go and search this, but we get a list every month directly from Fannie Mae and Freddie Mac. It is what's called an approved and a denied condo list. So it's basically a huge Excel sheet of every single condo in the state of Florida that's either been fully approved by Fannie Mae or Freddie Mac, or denied by Fannie Mae or Freddie Mac. And so this, before we even reach out to an HOA, this is the first place I go to. And I want to bring it up real quick. Let me see here. Can you guys see the Excel sheet? Make sure you guys can see it.
Yes.
Perfect. Okay, sweet. You're brave. All right, so this is the Excel sheet. Now, if we go down, we'll realize that there are a ton. So you see the tab down here, it's FNMA, that's Fannie Mae approved projects. And so this list gets updated monthly. This is the September list. And so we can go down here and start scrolling through and realize all of these, this is in the entire state of Florida. Every single one of these condos that I'm scrolling through is eligible for 3% down financing, conventional financing for a first-time buyer, or a second time buyer who already has owned a home can put as little as 5% down. And I keep going through here. I'm trying to see what how many there are right now. 2,922 condos in the state of Florida are Fannie Mae approved. It's great news, right? I mean, that's a lot, and it makes our life easier. Now, if a condo is on this list, all we need is the master insurance policy and confirmation of special assessments. So I gotta repeat that. If it's on this list, all we need is the master insurance policy and a confirmation of special assessments. There's no condo questionnaire needed, no budgets needed. It's a very streamlined process. I'll give an example. If we go to like Edgewater 33137, right now, let's see, 4, 5, 11. There's 11 condo units in 33137 zip code that are eligible for Fannie Mae, conventional financing. Now, it does not mean there are not other condos that can't do 3% down financing. You can still find other condos that can, but you have to go through the normal process, budget, condo questionnaire, everything like that. But if you have a client that says, man, like I want to go buy it for Midtown, for example. Well, there's 408 units there. This is Fannie Mae approved. Well, this is streamlined now. Let's go show them all the, the units in there they want to see. Let's get the master insurance. Let's confirm no special assessments, and let's rock and roll, right? It makes it super easy. Let's go on the other side though. If we go to the denied section of the condo list in the whole state of Florida, down here at the bottom, this is unavailable projects. If there is a condo that's on this list, this means that conventional financing is not possible until the reason of unavailability gets removed by Fannie Mae. And I'll talk about that in a second. But if we go down here, oh God, we're down to the 50,000. I just want to see how many there are. Actually, I haven't checked this in a while. Well, I don't know if I'm gonna be able to do that, but anyways, there's a lot, but there's not as many denied as approved. So that's obviously positive news. So let me see here. I think, all right, there we go. So if we go to 33137 here, there are 8. So there's 11 approved in 33137. There's 8 denied in 33137. So not as many denied, but there still are. So if we look at this, like Icon Bay, that's a popular condo. Critical repairs, deferred maintenance. What does that tell us? That means that they're going through structural issues right now. I don't know to the degree of exactly what that is, but that tells us we need to dive deeper on this. It may mean the client needs some non-warrantable condo financing. It may mean this could have been denied 2 years ago. It actually should be removed from the list. If you can reach out as the agent to the HOA and figure out what's going on, we can take data and get it removed off the list from Fannie Mae if it's truly been satisfied. So we can help get the condo off the blacklist, what we call it, right? So does anybody have any questions on this? I'm going to email this to everybody after the call, so you guys have this registry. I asked not to just start throwing this all over social media or sharing this because it is proprietary and not everybody can have access to it. So I use it as your advantage, right? As kind of like a a secret weapon for your clients. I wouldn't be sharing this with every single person out there because then everybody has access. Now, I will tell you this list gets updated every single month. So come a few weeks from now, we get into October, I'm going to have a new list. And so I'll start sending everybody the updated monthly list every month so that way you have it. If you didn't get it, just shoot me a text or an email and I'll send it over to you. So does anybody have any questions on this Excel sheet before I hop out of here?
Hey, Mark, it's Tara.
Hey.
Hey, I just want to go back to the last slide that you were chatting about because I was on mute and I couldn't get it off. But I wanted to maybe make everybody aware additionally that since Surfside, the new questionnaire states, does the building have any structural defects or however it's worded? And the condo managers are refusing to answer it. So that's pinging the need for the meeting minutes. When you start looking at the meeting minutes, maybe there's things in there because it happened to us, right? With the last one that we were doing.
Yep.
It's, something as silly as, what's going on with the roof. Then that pings the team to have to look into it, which could be something very minor. But now that there's a roof issue, it's something that's paid for, the litigation's already over. It can cause a problem with the financing just because before that, you didn't have to look at the meeting minutes, but nobody's answering those questions on there because they don't want to be liable. So I think that's going to be a big thing too, because we tried to put a couple through and the property managers are not answering that question. So we're almost always having to go to get the meeting minutes, which could cause additional, hiccups in your financing.
And that's a huge point because I think if the condo is not on that list, right, and we have to get the condo questionnaire, one of the things that we can set expectation with the clients, but we can try to move as fast as possible to get the condo questionnaire. Like, let's get that. Let's not wait till 3 to 4 weeks. Let's try to get it in week 1 or week 2. That way we can get through as much as possible. And if they're not going to fill out certain questions, that means we're going to have to dive deeper, right? And we have to get meeting minutes. And so every HOA is different. There's larger HOAs are ran by management companies and they're not willing to fill certain things out. Smaller ones, a lot of times they'll just fill it out. So it kind of comes down to risk at that point. Danny, do you have a question?
No, I just wanted to reiterate, I know you mentioned it, but I just wanted to reiterate it so everybody just pays close attention. You know, that list is we get it updated on our end once a month. We have the ability to request a date, you know, if you have a specific condo that's not on that list, we're able to, you know, reach out and request to see if that one has been updated since the last time we received our updated list. But I don't want you to take the list as an end all be all, because if something has changed, good or bad, since that list was produced, it could potentially not be approved or not be denied anymore. So please just take that list and use it as a guidance to know that it's been something that has been approved or hasn't been approved in the past. And the likelihood that it's like that still is the same, but we're still going to get the you know, the pertinent information to make sure that it meets the criteria. You know, it's just more likely than not, if it's on that list, it's going to meet that threshold, so to speak. So I just wanted to kind of reiterate that because it's
Yeah.
you know, if we get the updated insurance, we've had situations where it's on an approved or denied, and we got the updated insurance and they changed their deductibles, even though they verbally told us they haven't changed their deductibles. So it's just, you know, you don't want to just take it as a final stamp of approval, but it is a really, really good guide to make you, you know, feel comfortable that other things have succeeded in the past in that particular unit. So
Yeah, no, definitely. And yeah, exactly. It's a guide, but it really helps pave the way and save a lot of time. This is an example of a conventional full review condo questionnaire. So what you'll notice here is it's a lot of questions, right? And if you guys want to copy this, I can send it over to you. But there's 35 questions we have to ask the HOA. Again, this is if it's not on the Excel sheet. If you look here, right? Deferred maintenance, this is the biggest section right here. Are there any pending or active special assessments, right? So if they say yes, can of worms are open now, right? We have to go into it. Critical maintenance, material deficiency repairs, deferred maintenance, code violations. This is a one they added recently too. Has an inspection report or reserve study been done in the last 3 years? So if a reserve study's been done within the last 3 years, we've got to now review that. Come the end of the year, every condo is supposed to have a reserve study. So come next year, this is going to be most likely yes in most situations, which means now we're having to look at reserve studies as well. And that's what I'm telling you is like the landscape the next couple of years is going to be choppy, and we've got to bob and weave and navigate this and have options to be able to finesse through this. I will tell you that the non-warrantable condo questionnaire is way less than this, about 10 to 12 questions. It does not ask about special assessments. So for example, if a condo has special assessments, we know that's going to kill the deal conventional. There's a lender out there, there's lenders out there that do not ask about that. It's kind of a don't ask, don't tell policy. I mean, it just is what it is. And it's a way around a lot of those situations. And we can do a one-off meeting or one-on-one meeting with anybody that wants to dive deeper in these questionnaires and stuff. But for the sake of everybody's time, I don't want to go through that today. All right, so I'll send you guys this list. Use it to your advantage. If you have any questions on that, reach out afterwards and we'll go through that together. If it's approved, again, it stays in-house with us at Benchmark. Everything's happening, conventional is done in-house with Benchmark. We're not brokering the loan out. If it's denied, though, this is where it starts coming into play where, you know, we do maintain a lot of the communication with the client as the broker for the loan, but we don't underwrite it. I'm using an outside underwriter with different banks that do non-warrantable condo financing. So there's more creative options, but there is less control. So you guys got to realize, like, maybe we want to do a 45-day close. I've closed deals within less than 30 days, non-warrantable condo financing brokered. It's totally doable. But I will tell you that it's not as streamlined as when we can do it in-house. And that's just part of it, right? So it's good to set expectations with the clients as well when we're doing these brokered condo loans. So we have over 20 different options when it comes to that. And when we look more on deny, like here's some of the solutions, right? An excess insurance deductible, you know, inspection or, you know, issues, condo hotels, rec leases, new construction, a lot of the things that we see the issues of, there are still solutions around there. I will be fully transparent with you guys that structural issues right now, Not every bank wants to touch that. It's case by case. It's like literally like live time when you're seeing like concrete restoration and a lot of the stuff we're seeing, it takes thorough review. And even some of the non-QM lenders are still not willing to lend on it because there's a lot of risk to that, right? And so I just put that to say that if we get like a hairy condo situation that has a lot of structural issues, I'm not saying we can't do it, but we need to set the right expectations with the clients that it's going to take some due diligence to make sure that we can get it done. So these are some of the non-QM lenders we use. I told you there's over 20, but at the end of the day, like there are a little bit higher rates depending on how much you put down, right? If a client does 30 to 40% down, the rates are very similar to conventional. Like right now, 30-year fixed rate mortgages are in the low sixes for conventional primary resident. If you're buying with non-QM or non-warrantable financing, with 30 to 40% down, the rates are in the mid sixes. It's a very small spread. It's not that much of a difference. If a client's doing like 10% down though, or 15% down, okay, instead of a 6 right now, they're probably getting an 8, maybe a 9. It's higher interest rates. And so depending on the client's financials and what they're comfortable with will depend on if that's going to make sense for them or not. So this is I'm going to, again, send this over to you guys so you can literally just kind of copy and paste this. You don't have to retype it yourself. You can put, copy and paste it. So I'll send this to you guys later. But this is what I put in emails to HOAs or giving to my agent partners right now to basically copy and paste this and send it to the HOA when we're in the offer stage or when you're listing a property. Documents to request. Let's get the 2024 approved condo budget. Let's get the master insurance, right? Master insurance and master flood insurance if it's available. We'll start reviewing that. 30-year inspection, 40-year cert if that's applicable. And then recent structural or engineering report or reserve studies, right? If any of those have been done, let's get ahead of it. Now, does not mean that I'm going to take that and just go start throwing it right at an underwriter. We're going to review that with our condo team up front, right? And so if you guys send us these documents, I can usually get an answer within about 24 hours from my condo team or less. And sometimes it's an hour or two. So once I have the documents, it is a pretty fast process for us to start looking through this stuff and catch any red flags. So that way we can move quickly in the offer stage for the client. Questions to ask: are there any active special assessments? Let's get a copy of the special assessment and itemization of any repairs. Have they been completed? Things like that, right? Litigation, let's get a copy of the lawsuit. Let's see what the deal is there and what's going on. If it's a completed litigation, it's already done, that's a different story. We're good on that. Now, here's where it gets a little tricky. If a litigation's been completed, but the repairs haven't been done, it comes down to, do we see that, right? So if a litigation is completed, condo questioner says no, and there's no special assessments, we may not see it, right? So that's the reality. If it's pending though, it's going to say yes, we're going to have to dive into that lawsuit. And then confirm with HOA if there's any commercial space, right? So these are the big ticket items that you can literally copy and paste, send to the HOA, and save yourself a lot of time. And let us be your partner and do the legwork on that. You guys don't have to go and look up Fannie Mae's guidelines and figure all this out for your clients. Like let's do this together and work through it. And listen, we're not going to get 100% of the way there, but we can get 90% of the way there. And if we can eliminate 9 out of 10 deals falling through up front versus just like, excuse my French, we're throwing shit at the wall and hoping it sticks. Like it's going to make everybody's life a lot easier, and our clients are going to trust us more, and they're going to realize that, hey, like I've got people that know what's going on in this condo market behind my back and with me. I feel a lot better about this right now. So I'm done talking. If there's any questions that you guys have, I want, kind of live talk, we can keep this open. I'll stop sharing screen. Before we do that, if you want to scan the QR code here, this just goes to my number. If you want to text me and set up a one-on-one like coffee meeting or another Zoom meeting to dive deeper on any of this, I'm happy to do that. So feel free to scan that and shoot me over a message. The next mastermind topics we're going to do, I'm going to do a buyer consultation workshop. I started doing buyer consultations in 2021, and obviously with the NAR settlement, situation that's come around, as agents now, doing more buyer consults is, I would say, necessary, and you should do it. But there's a lot of things that we do that are very similar to what you do, and so we can kind of collaborate, and I'll share some ideas that have really helped me over the last few years to increase my conversion. I went from 23% to 40% conversion with my buyers in 12 months just by implementing a buyer consultation process, and it really helps with increasing that conversion with clients. Second thing we'll do is we're going to go over getting referrals from your database. So what are some real strategies you can do live time to actually get business from your database, whether it be current clients or past clients. And then more, right? If you want, if there's anything you're specifically wanting to learn about, throw it in the chat right now or send me a text, and I'm happy to do a whole mastermind around that topic, and we'll make it happen together. So, any questions from anybody? Did anybody have a Cuban coffee this morning? Awesome, guys. Well, I will be respectful for everybody's time. Again, shoot me over a message if you want to set up a one-to-one or do anything and learn a little bit more on this stuff. Happy to help. I will send the recording. I'll send the Excel sheet and a copy of the slide deck that we went over today. And I'll send that to everybody so you guys can go back, rewatch it, and have that. And I look forward to crushing the rest of this year with all of you guys. Take it easy, guys.